In the final trade of the day, you don't always have to directly buy property to invest in real estate. We have Mike Patton, the head trader at Funder Trading, here to talk about real estate investment trusts, better known as REITs. Mike, what would be your REIT pick?
All right, so right now I'm focusing on NNN REIT Incorporated. The symbol is NNN. This is a REIT company, obviously a real estate company, and they're not a huge company, only 82 employees, based out of Orlando, Florida, but looks pretty decent on the charts. Looks pretty decent on the overall metrics. Right now, the stock's trading around $39 a share, but I do see significant upside potential for the stock, possibly up to maybe $48 a share, so about $10 higher than where it is now. But on the other side, we do have earnings for the company coming out in about 13 days. So I don't think right now is the best time to pick up the stock, but options might work. You know, a person could do a vertical spread or a call going through earnings. But after that point, if things look as good as they do now, with the institution still buying and the current valuation is pretty nice, earnings are solid, I think this will have some good upside. But let's talk about the risk. In the event that it doesn't play out the way that I think, we definitely would like to get out of that stock if it's trading, I would say, below $38 a share. The exact number probably is more like $37.50. But other than that, looks pretty solid. So hopefully it works out.
Mike, overall, is now a good time to invest in real estate using REITs?
Good question. I do think so. Obviously, interest rates going up had a negative impact on the real estate market, but now we are at a point where interest rates seem to have plateaued, and we can see obviously the Fed's been moving rates back down. So I do think that overall that should be beneficial to the real estate market. But a lot of these real estate investment companies, they're focused on rentals, and bottom line is rentals are going to be here to stay. I mean, if people can't afford to buy the house, then renting makes a lot more sense. So a lot of these companies focus on that, and I think that that's going to be a good marketplace for the long term. But also builders with lower rates, a better environment for that, which I do think the current administration seems to be, usually is more pro-business focused. So I think that we're in a good environment to see a rebound in the amount of building, maybe because of reduction of regulations, et cetera. So it does look like a good time. REITs don't usually, these stocks usually don't have massive upside potential, but they're usually pretty stable and they pay dividends and they're usually pretty solid. So looks like a good time. So I think this is one of the better companies out there to look at right now.
Great information. We thank you, Mike.
No problem.